Hello everyone, here is our part 5 of company account. So before moving into the part 5, just recall our previous classes. We have already conducted 4 parts. So I hope all of you are remembering those classes. I'm just going through all those classes. So the part 1 was consist of company and different types of company. In part 1, we were discussed about these companies features and what are the different types of companies based on different criterias, and in part 2 it was related to share capital and different categories of share capital. Mainly we have seen equity shares and preference shares. There are different modes of equity shares and preference shares, its features, everything were discussed in that class. And part 3 it was related to issue of shares, how the shares can be issued, and the journal entry or the accounting treatment for recording this issue. In the chapter we have seen the different stages of collecting due amount from shareholders, such as application, allotment money, call monies, etc. And we have seen the accounting treatment as well. And in case of part 4, we have seen how to issue shares in premium or in par or discount, and those accounting treatment to issue shares in premiums and discounts. So as far as now we have completed 4 parts or 4 classes. So if you still not remembering those classes, just go through these previous videos, and later, if you clarified all these 4 classes, then let's move on to the part 5. So part 5 consists of calls in arrears. Calls in arrears refers to when any shareholders fail to pay the amount due on allotment or on any other call. Such amount is known as calls in arrears. As we know, we will be issuing shares. These public companies will be issuing shares in different installments, and they'll be collecting this amount on issue of shares through different installments, application, allotment, and call monies. So first, at the time of the applying for those shares, shareholders will be paying this application money, and on an allotment, they will be paying allotment money, and when the calls are made due, they have to pay the call money also. So sometimes some shareholders may fail to pay this call money or allotment money. In that case, that there will be a debit balance in share allotment or share call money. This amount is treated as calls in arrears or unpaid calls. So calls in arrears represent the debit balance of all the calls in account. Calls or what we say, allotment account. There are 2 methods of treating calls in arrears. First one is without opening calls in arrear account. Under this method, there is no separate accounts are not opened for recording these calls in arrears. Instead, debit balance shown by share allotment or share call money is treated as calls in arrears. Just let's explain this situation through an example here. So see the example. Allotment money due on 10,000 shares at rupees 20 on allotment, and the same received only for 9,000 shares, which means the company made the allotment money due for 10,000 shares, and 20,000 rupees is to be paid on allotment. So the company has to get how much? 10,000 into 20, 2 lakh rupees in the form of allotment money, but the company received only for 9,000 shares. So there is a calls in arrear of 100 shares into 20, which means 20,000 rupees calls in, not calls in arrear is there. So in that case, let's discuss how it can be treated under this first method without opening calls in arrear. So see here, just think about the journal entry. How we can record this? First, allotment money due on 10,000 shares. So what is the journal entry for making the allotment money due? Yes, think about it. What is the journal entry for making the allotment money due? Share allotment account to share capital, isn't? Yes. Share allotment account to share capital rupees 2 lakh. 10,000 into rupees 20. 2 lakh rupees is made due in the form of allotment money. Then next we have to get that allotment money of rupees 20 lakh, but there is an share calls in arrear. That's why we'll get only 20 into 9,000. So how much amount we'll get? 29,000, 1,80,000. So what is the journal entry for receiving allotment money? Bank account data to allotment money. Yes. Bank account data to share allotment account. How much we got? 1,80,000. So what is remaining 20,000? This difference or the remaining 20,000 is to be treated as what? Calls in arrears. So under this method, the method without opening calls in arrear account, let's see if we have prepared ledger called share allotment account. Suppose it is the share allotment account. Here is the share allotment account. So if share allotment account debtor rupees 2 lakh to share capital, so there is a debit balance of rupees 2 lakh. Sorry, it is too difficult to write with this mouse, so please ignore the handwriting and all, just be on this content. So there is a debit of rupees 2 lakh in the share allotment account. Then when the next transaction bank account related to share allotment, when the amount received, there is a credit of rupees 1,80,000 here in the share allotment account. 1,80,000 rupees credit. So still there is a balance. Here is the bank to bank because of bank. It is because of share capital. So still there is a balance of rupees 20,000. So this is the debit balance because debit side is higher. So it is the balance CD. So there is a debit balance of rupees 20,000. Actually, we have to get 2 lakh rupees in the form of allotment money, but unfortunately, we got only for 9,000 shares, that is 1,80,000. So in that case, there is a balance of rupees 20,000. This balance is treated as calls in arrears. So this is the first method of maintaining calls in arrears without opening calls in arrear account. So this is the first method. So here this difference of rupees 20,000 in the share allotment account, this debit balance in share allotment account is treated as calls in arrears. This is the first method without opening calls in arrear account. Then the next method. So here the second method is by opening calls in arrear account. So when a company maintains this a separate account calls in arrear, we need to form a separate journal entry. So see here, when if we are maintaining calls in arrear account, we have to include calls in arrears in our journal entries. So the journal entry will be like this: calls in arrears account data to share allotment. If the arrear is happened with this allotment, the journal entry will be like this: calls in arrear account data to share allotment. Or if it is arrear is with the column money, calls in arrears account data to share first and final call. So you have to keep in mind that this calls in arrear may happen with allotment money or call money, or it can be at the same time it can be with both this allotment money and call money. So let's discuss the same case with the previous example. Oh, sorry, there is one more thing. If sometimes we can get back these arrears when the shareholders pay off in this arrears later, we have to do the journal entry like this: bank account data to calls in area. So let's discuss the previous example with this method. Allotment money due on 10,000 shares of rupees 20 on allotment, and the same received only for 9,000 shares. In those case, how we can treat this journal entry, or how we can make the accounting treatment. So at the first case, we have to make the allotment money due, right? So share allotment money account ledger to share capital. So allotment money become due here on 20,000 shares of rupees 20 each on allotment. So here allotment money become due. The next, we have to collect the allotment money from the shareholders. So what will be the journal entry? Bank account ledger to share allotment. Bank account ledger to share allotment. But instead of 10,000, we will get only 9,000 shares. So 9,000 into 20 for 1,80,000 is the amount we got in the form of allotment money. So bank account ledger to 1,80,000. So there is a difference of 20,000 rupees is to be treated as calls in arrears. So one more generally will be the calls in arrears account ledger to share allotment. So this is the case when we are opening a separate account called calls in arrear. We have to show the difference in an account calls in arrear account to share allotment. I hope all of you got this one. Actually, there were a calls in arrear of rupees 20,000. So it is debited to a new account called calls in arrear account ledger to share allotment. This is the case. This is the second method, opening calls in arrear account. Then there is no, if we can make this journal entry in a different manner, we can combine these two journal entries. We can combine these last two journal entries in a combined or compound journal entry. See, this two journal entry can be combined into bank account data on like 80,000, calls in arrear account 20,000, to share allotment 2 lakh. So there is no need of this double entry or this two times enter in this journal entry. We can combine this journal entry into a single journal entry by taking bank account ledger 1,80,000 and calls in arrear account ledger 20,000 to share allotment. Here both case there is a share allotment account, so it is 2 lakh. So we can make compound journal entry from this. Then it is as per your convenience. If you don't want this, you can go like this, but it is always better to make compound journal entry out of these transactions. Then here is one question for your practice. A PB Limited issued rupees 50,000 shares of rupees 10 each at a premium of rupees 2 payable as under. On application 3, on allotment rupees 5 including premium. So premium is rupees 2. So the allotment money rupees will be the 3. Then first and final call rupees 4. So total 12 rupees there. And all amounts are duly received except final call money on 5,000 shares held by shareholder. Show the journal entry by opening calls in arrear account. So we have to record all these transactions and finally have to show the calls in arrear account for this 500 shares. So I hope you will be doing this with your own. If you have any queries, feel free to ask me this. Okay, meet you in next class. Thank you.